Well, let's welcome in our first guest on the show. Rahul Chadha, founder and chief investment officer at Shikhara Investments, joins in. Rahul, great to have you with us. Exactly that. Let's take that debate forward. The note that I was reading out from JP Morgan, right? Whether the domestic measures that we've seen, whether there will be enough to inspire a real meaningful pickup in earnings. And we also have the policy tomorrow, so weigh in on that as well. I mean, whether you're expecting more monetary easing as well, and does it all lead to sustained double-digit earnings growth?
Yes, I think that is the big question for markets. That look, some bit of a tailwind is expected from these GST cuts, the rate cuts, and the tax cuts which has happened. There is a repair of household balance sheet which is going on. So it is expected that next 3-6 months should be good. I think the bigger question for India is what is happening in terms of the white collar job disruption because of AI. We've seen the IT services companies do a fair bit of a cuts here. One is looking at whether some of the GCCs look to slow down their hiring because of AI-led productivity gains, etc. So I think those things are on minds of investors. And while this is happening is North Asia, particularly Korea, Taiwan, and China, they have a strong AI story in terms of the AI enablers. They have the AI infrastructure or AI adopter companies they have, and valuation is cheaper. And it's but natural for market participants to currently and overweight those markets over India.
But what are you liking in India, Rahul, at this point in time?
So again, our view is over the next 6-9 months, you will have opportunities come in India. One would look at banks selectively, look if the nominal growth remains slightly lower than before. Obviously, banks will do well, but not like the way they did in the past. I think selectively autos present an opportunity on back of these GST cuts and affordability coming through. We've continued to like the discretionary consumption, the consumer platforms, something like a Zomato, Nykaa, etc. And we continue to like that. Travel and tourism is a theme which took a breather because of the border skirmish. I think that comes back around Q4.
Rahul, hi, good morning. Good to have you here. Travel, tourism, so the hotel guys or airlines or even, for example, OTAs. Ixigo has been such a big mover. Make My Trip is the big one, but it's in the US. But, I've heard they've not happy with the valuation they're getting there, so maybe trying to make their work through here. But what's your sense, Rahul, on the travel side?
It's a combination. Yeah? It's a combination of airlines, which is Indigo, hotels, some of the select hotel names, etc., and then OTAs, which includes a mix of both Make My Trip and Ixigo. Both of these are fantastic companies, and again, I think they just touched the tip of that iceberg in terms of the customers they can mine. And as we saw with the C-Trip in China, the numbers are going to increase in the coming years.
Hi, Rahul. Good to see you in. I remember you liked the quick commerce players as well in our chats earlier. Some of them have done very, very well. Do you think there's still a big runway for them? Because, you've got good returns as it is in the last 3-4 months from the time we last spoke. You've indicated that things should look up from here on. You think there's still a long runway?
Yeah, no, we've liked the internet platforms across the Asian region, and India, you play those internet platforms through the quick commerce place. What's happening with these some of the leading quick commerce plays is that competitive intensity has somewhat abated. You can see better response from their dark stores in the top 50 cities, etc. So you'll see that operating leverage play out. And remember, these guys did well when the economy wasn't really doing that well. And now with the tailwinds coming in the economy, they should do even better. So we continue to like these names. These are the names which have wide TAM in terms of gaining share in the grocery segment, and they will continue to do well.
So in the financials, Rahul, what's the play?
Yeah. So financials, again, it would be lower weight compared to before, and a couple of reasons for that. One is, like the way I said, look, unlike in the past where nominal GDP was somewhere around 10 to 12, 13%, I think those numbers are going to be slightly slower, 8 to 10%. So you're limiting yourselves to select private banks, etc. One is looking at capital market plays, but if the market is range bound, I think these names, having done well for last 4 5 years, may not do anything. So maybe a decline, some of the few capital market plays, etc., the wealth managers or asset managers may be interesting. And outside banks, the capital market plays, I think insurance looks interesting here. With the cuts GST is provided, we should see uptick in their policies, and growth should come back here. So insurance names look really interesting.
From the old financials to the new age, right? The big global theme is the race for compute and, data centers and all of that stuff, everything which goes into a data center, I guess. Here in India, we've got, say, old real estate player like Anantraj, which is back in the reckoning because of the data center business. You've got, some computing businesses like NetWeb, which have done very well. Anything on that front? You've got a global view, global perspective as well, Rahul.
So we are playing these AI enablers, which are the memory guys through Samsung Hynix in Korea. There are plays in Taiwan, the likes of TSMC Quanta, which are there in our portfolios. India, there are no clear-cut plays. In the past, one has seen some of the names you said get impacted by slowdown in real estate sales in the NCR region, or kind of have some delay on the execution, etc. So India, what we are playing is the AI adopters. And I think that is probably the big story over the next 6-12 months, as some of the smart Indian companies kind of use AI to increase their productivity in terms of reaching out to their end customers.
You don't think, but you've given all these a look? Some of them, they're very few, but companies trying to really sort of, not just the adopters are one, the others are enablers. You think makes sense to, you've looked and you said, well, maybe not.
Yeah, see, I think from our side, we get a better play, a more globally competitive play across Taiwan, Korea. Yeah. So I think which is why we've chosen those names. But somebody who invests solely in India will, I'm sure, look at some of the names.
Correct. Absolutely. And I think that's a good point. And that's a good, important distinction as well. Thank you very much, Rahul. Appreciate you joining us here on CNBC-TV18. Thanks for sort of running us through what you make of things here and around the world as well. We'll take